Okay, what's going on? Good evening. Tonight is Monday, the 29th of June, 2026. And what this is going to be is the daily recap or trade review for Monday's session that we were inside the Discord. And so last 2 weeks have been pretty crazy. We've been on an absolute tear, right? We've been seeing some really high quality setups, as well as just learning a lot through just the market conditions that we've had in the last 2 months, especially with Trump and oil and just everything going on in Iran and just the tensions rising and falling and the news just coming and going. But the system's still really just in place. Okay, and that's one thing that we've noticed is if you look online, you look other places, most people are having trouble right now in the markets. But because we're following the system and we're all staying accountable to the plan, we're able to really, observe the masses and do the opposite. Okay. And so one thing I wanted to show here is I'm showing the DRC, right? This is something that I got from an individual named Lance Breinstein. He's an individual that trades on YouTube, made over $10 million in a month, right? He was one of the top traders with a platform called Trillium, and he talks a lot about refinement process. He talks a lot about timing the turn on the right side of the V and understanding short covering inside the market. And so that's something that I personally specialize in and really put a lot of my focus into. Okay, and so one thing you want to focus on every day that he talks about is going to be your refinement process, right? And so let's see here. If that comes back. But what I like to look for here, the main thing I like to look at here is going to be my bias, right? So my bias, my key levels, what drivers, what news at that 7:30 time in the morning, and what setup expectations do I have? This was like going into my pre-market read. Now, I go over this whole pre-market read inside the Discord live with the team. So they end up seeing the bias, they see the key levels that are marked up, and they see um, my understanding of the context of the market and what I believe is happening, because I go over it live with them 15, 20 minutes before equities open. Okay. And so then when you go and you look at, since this is ready. Okay, cool. So then when you go and look at number one is you always want to focus on improving something every day. Okay. So number one, right, it's going to be improving something every day. Number two is, what did you learn today? There always is going to be something to learn inside the game of trading in the system, right? And if you can't feel like you're not learning something, then you're probably not taking like enough risk, right? Or you're possibly just um, playing it way too safe, because you have to learn something, and then in order to learn, you have to have done it wrong. Okay. Step three, changes I need to make from today. So that comes down to maybe reoccurring things from the past, right? Old mindsets, or one of the things I would say right about now is because we've had such parabolic moves, is trailing my risk maybe a little too early, or not following prior bar because we're 200 plus points in profit, right? Risking 20 to get 200 is 10 times your risk. So, I mean, if it happens in 15 minutes, it's kind of like you know, you don't have to beg for the market. You just need to take what you can get. Okay. And then the market review is like step four. That's kind of like where we're at now. This is just kind of like a refresh at the end of the night. What happened in New York? What was happening around that 9 a.m. time, like 9:05 to 9:10? Then it says there 10 a.m., 10:45, 11:15. Usually I'm done executing on the charts about 11:15, but I also like to know what happened at 12 p.m. Central Time Zone, which is lunchtime here where I'm from. Okay. And then the main thing you want to do with this document is grade yourself A, B, C, or D. And you're not grading yourself on P&L, you're grading yourself on execution of your plan. Okay. And so that's pretty much what I do. And I've already done that. Like I said, I kind of showed you guys, I do it still the Stone Age way. So I'll kind of show it here again. It's probably a little bit easier like this, but I still do it the Stone Age way like this. Okay. And so, I may start doing it all digital here in Q3, but I also just really enjoy this. Okay. And so you can take this, do what you want with it. Okay. And that's the main thing I would say at the bottom. Okay. So we'll jump straight into the bias and what we were looking for in the morning. So looking at daily dollar, or excuse me, weekly, daily, 4 hour dollar, I was starting to notice the crown form here going into yesterday, right? So the market opened 101.40 and we were breaking down. So I was kind of anticipating price to kind of fall back into the range of like 120 level, right? Kind of feeling this level here. So you have this level here is your low, this is your high, and then we're like crown forming, and then we could push down into maybe this FEG, right? Or maybe push down a little bit farther into this bigger FEG, right? And so those are the two levels I was looking at. Now, of the overnight price, I'll kind of go over after I go over the bias for what I thought for today. So everything you see printing on this new daily candle here, this white candle here, that's actually from the new day. And so we're not going to consider that. Okay. We're considering everything pretty much to this candle here. Okay. Because that's Monday's daily candle. And so that's what the bias was yesterday, is to see maybe a price move down, maybe break this trap candle here at the key level 184, and see weakness. Now, at the same time, when dollar index is going down, we're looking for upside on futures and indices. Okay, and so now when we jump into the bias, like I said, I wanted to see downside, so I wanted to see upside on futures. Now, when we look at higher time frame futures, okay, we were looking at ES here in the middle, NQ on the far right, and then YM. YM has been very choppy, but based on the certain reads that and the way that I read the market, supply, demand, and stack candles and other things, I was seeing continuation to the upside. But overall, my bias, because of the dollar, I wanted to see continuation. Now, what made it really interesting as well, let me take a drink of water here. You see where I have Mr. Penguin here on ES? Well, there were equal highs here in this zone, and it was coming out of a daily demand. So, guys, my thought process is pretty much this: when I see a daily demand candle like this on ES and like this one on NQ, and the pattern is presenting itself as bullish, right? For me, what I'm anticipating is individuals who shorted, let's just say, um, Monday of last week coming down into the end of the week, they shorted down, right? And now those individuals are covering in this specific zone. Now, I've watched charts enough to understand that this is a demand candle and that shorts will cover in a zone. But I also have watched charts enough to understand that this was the beautiful low that we played off of, excuse me, on NQ and ES. And I understand where this range actually is, right? Like all this is just a bigger range where this is the low and this is the high. And this is where they broke it and it's like the midpoint, okay? Same thing with NQ, okay? Excuse me. I took some buys from the 23,000 area, so like in here, and then took them to here on CFD. Excuse me. Okay, so took those on CFD, right? And those were like 2 or 3 weeks, right? It was like multiple days. Okay, and so we're not gonna be able to see the data because of this is a futures contract. But this is what I'm trying to explain as well. Is like this is the low, this is the high on the daily, and like essentially this could be like the midpoint. Okay. And so when you're looking at them from a comparative strength analysis, what I was wanting to see because of dollar was a rejection and shorts cover, right, on a daily perspective, okay, on especially these two. Now, when you jump into 4 hour, right, jump into a 4 hour time frame here, what I was looking for was going into New York, you had ES here in the middle, you have NQ on the far right, YM on the left. I was looking for that bigger time frame, right, which would be here, right? That 4 hour demand candle inside that daily demand candle to be respected. Now that candle was respected, and here was also was the open. The open was so aggressive, they created so much FOMO, right? So I'm going to show ES and NQ, but NQ was, or ES was just really nice in the price action, right? And it was giving me the cue, right, to buy NQ because we had a clear liquidity target that they wanted to draw on that liquidity on ES. So for me, when I see that, I'm going to play to an like here on NQ, I'm going to play to an inefficiency, right? Like as we go into draw on liquidity, I just want to know where the price is at the same time. And as you can see here, this was like that inefficiency, that FEG, right? At 30,000 key level, right? So I'm looking at this is the high, this is our low, right? And then I'm gauging this area for buys to either get the break, either get above the FEG and go through last week's high, or to see rejections inside supply like we did, okay? And so really beautiful price. And then I was calling out ES at the end of last week saying if we get that bounce out of the zone 73.60, that's going to push us out of NQ, okay? Now, when you look at these 1 hour time frames altogether, okay? When you look at these, yeah, okay, why didn't it go? Okay, when you look at these 1 hours, I know I have a lot of stuff going on here, but I have a lot of price I've been paying attention to. Okay, so when you look at these 1 hour time frames, now this 1 hour zone for NQ today was really, really small. Like you had to really know to mark only that area, and you had to know how to identify specific liquidity. Okay, so like this area here was a really, really nice liquidity, and then the pushes down were insanely fast. That's why it turns into a wick, right? Because then that's the only way that the 1 hour can form like this. And then you'll see the price present when the inside the candles on the 15.5 and 1. Okay, and so this was the second play of the day. Like we took this after we had already bodied the New York Open. So what I'm gonna go over when it comes to intraday trade first and put most of my focus on is the trade we took in the Discord, and then I'll give this ideology out on this area um, at the end of the call after I go over the position we took today. But overall, same thing, right? 4 hour, there was a massive demand candle. Believe whatever you want to believe. I believe that this is a 4 hour demand candle, and once that candle was set, essentially like this, all right. So as soon as basically 5 a.m. hits, this is 5 to I believe 9 a.m. Central Time Zone, and then this will be 9 a.m. to 1 p.m. Central Time Zone. Okay. So what I was anticipating at this exact moment, right? Going into New York Open was a push down potentially into the 4 hour demand candle under old lows. Okay, because I anticipate when I see intraday shorts, I anticipate price to fall, right? And the shorts, right? If you short up here, you're gonna have buy limits down in these zones. Okay. And so what I was anticipating is that they don't get that push lower than previous day low, so 29,200, then shorts will cover in that area, and I'll be able to pick up the other side of the order and have them a disgusting buy position. Okay. And so now when you look at, let's just bring up just NQ here, or we'll just go to the snipe window where we actually took it, okay? And let's do this. We have all the screens so we can see, okay? Okay, so now when you look at this, okay, I know it's kind of a lot here as well. I'm gonna jump down into a 5 and a 1 minute to go over the actual entry that we took on this stream, okay? And I do think I have all the times of the different stuff. The other thing I want to do really quick is I want to show the Discord. And I just want to give a shout out to Josh. He's actually the first individual to let me pull this over here to join the Discord. And this is actually pretty crazy to see here. Um, but if you go into the members chat, right, you can see here today, Ricky wanted me to pop my shit. Here's 8K of payouts. Here's some inspiration for all the newcomers and non-paid members. Dial in, fix your bad habits, fix your mind, and receive the benefits of this great skill. Guys, this is insane. Okay. You gotta understand, he's the very first person to lock into the group. And the craziest thing about it is, I think we've done maybe one or two one-on-one calls, right? And he's plugged in every day and he showed up, and that's really amazing, guys. So that just kind of shows you the power of learning these concepts and understanding right there. Okay, 68 days of us being friends too. Now we're turning into, close homies. I'm sure that we'll all link up sometime this year, and maybe get to do something cool, maybe out where they're from. So really, really cool, guys. And then let's go back here really quick. So I just wanted to show that, and then I wanted to show a couple of the pictures here from the Discord today. So like this is one of the pictures that we had today. Okay, this was the entry, right, where we ended up having the push, right? It's gonna end up pushing higher and closing higher, and we were able to wait for the slow correction back into those 660s, 650 zones, trying to buy below New York Open, but the tap was pretty quickly. And then seeing that 5+R push back up was pretty insane. Okay, and so a lot of individuals were able to take that trade today that I gave out. Just trying to see. And so that trade across 5 accounts, right? It's 464. It's 29th, yeah, 464. So you can see here we caught 116 points. I never count ticks, but 934 ticks for anyone that counts ticks. And we held this trade, as you can see here, for 6 minutes and 11 seconds. Okay, so banger trade. Okay. Now let's go back. Let's go here. Let's see here. Okay, where is? Okay, so let's go back to the 5 minute, 1 minute entry at New York. Okay, Now, I showed that entry just now where we took it. Okay, so I'll pull that back up really quickly. Where is that at? Okay, so let's see if we can bring that over here. So you can see here, this is the entry. So this is the entry I'm about to break down and go over and the thought process and the ideology behind it. Okay. So at New York Open, we had under this area, we had an FEG. So if you could really notice it and you were paying attention, right, there was this FEG right here. Okay. So I'm looking at this one right here. All right. So I know we have this bigger one. So we don't need that for right now. All right. So I was looking at this area. Now, all you could see pre New York, right, before that equities open. So the equities open looks like right here. Before equities open, all you could pretty much see was this. So this was 8:15 going into 8:30. Okay. Now, when you're looking at a 5 minute, let's get a little closer here to equities open. When you're looking at a 5 minute, this is going to be your equities open, this white candle here. Okay. 8:30 to 8:35 closes up here, higher high. Okay. But before, this is all you could see. Okay. And so now when I jump back into, let's go to 5 and 1 minute here. Now, when I go back to that order, what happened was the market likes to at the orb, right? The opening range, right? The market likes to fleece people, right? So what it's going to do is it's going to, just get people to impulsively play positions. Now, what I like to look for is timing. Usually, first 5 minutes, first or no bad. So first 15 minutes of the hour, last 15 minutes of the hour, and then like 5 minute closes inside those execution windows, usually for really good positions. And so one thing that really gets people is they usually buy, like the concept of trading are buy low, sell high, but most people don't know what high and low is, so they end up buying in the wrong spots. Now, most people were chasing this trade. This was 8:31 here on the right. Okay, 8:30 to 8:31. That was the first candle. Then you had 8:31 to 8:32. Most people are going to start chasing this trade here, okay, on the first 5 minute opening range. I like to be patient and let that 5 minute candle close. That's something I usually like to do, and be able to get that sign of strength, that closing structure, and then a pullback into a demand zone that aligns with point of interest. I have so much data on this exact trade, it's crazy. Okay. Now, the trade that we took today did produce the result that we wanted, but we weren't in the right direction overall at that time of day yet. We were like price does end up buying up, but it does roll over first. But I'll go over that as well. Okay. And show you why we exited the position as well. Okay. Now, most people, like I said, when they're looking at this, they don't want to miss out. So they just FOMO in and they usually buy it, and they most likely buy it as it's breaking out of the 1 minute area and as the 5 minutes expanding. One thing I teach inside the Discord is you want to buy when the market's crashing and you want to sell when it's taking off. Right. So you don't want to be doing what everyone else is doing. Everyone else is seeing it buy up. That's why when they put their position on like this, right? No matter if they're trying to do freaking, ICT, fair value gap, whatever they're trying to do, or whatever they think they're doing, right? Essentially what they're doing is they're in the wrong spot, right? And you want to have a fixed risk, okay? You want to have a fixed risk. What do I mean by that? That means you want to have, for what I teach, is 20 for 60 or 20 for 100. Now, as you can see here, this would have been a pretty good trade and it would have probably delivered, but because of the location of the trade, most likely the individual or the trader would have, it would have done like this for them, right? They would have took the trade. They probably wouldn't have had a system to take 3 times their risk, or even looking at 5 times their risk, whatever they could be, right? And price goes up, starts to show them profit, breaks structure, and they're thinking, oh, okay, and they go break even, and it comes back and hits them break even. Now they're pissed, right? Because they're like, damn, I wish I could have got it, right? It comes here and starts to go off New York. People start trying to sell, and then it just rallies back up and takes them out, and they're pissed again, okay? And so you really have to have the understanding of like where you want to get in, and you really utilize supply demand. Okay. Now, people who demo trade aren't going to tell you that because they're just not going to do that, right? Because they don't take enough trades to understand that these areas are like magnets. Okay. Now, like I said, coming into this trade, this was that first minute, second minute, 8:31 to 8:32. People, like I said, will FOMO in. We got the first 5 minute close, 8:30 to 8:35. That's exactly what I want to see. So what am I thinking as soon as 8:35 to 8:30 to 8:35 happens? And this was definitely manipulation, right down to a lower zone that we had anticipated. As soon as I seen this, guys, I was on stream and I said, all we're waiting on, guys, all we're waiting on is a pushback into where? Our 5 minute demand, okay? 5 minute demand candle, right? Because it's all about getting into locations, okay? 5 minute demand, and then what I really want to see is price go below equities open, okay? Because that's what's going to trigger people on this type of fall. If they miss this buy, when it starts to fall here, they're selling, right? 29.17s, they're noobs. I'm just gonna be honest, like that's just what it is. Now, I also was looking, okay, I was like, cool. I also was looking like anywhere inside this candle like this, like I was kind of looking to like frame something inside this candle, but I know from watching enough film and I know from playing enough setups that the best trade was gonna happen under New York. Now, I did on the 1 minute as it comes back, I'm gonna kind of show and explain that too, because I did take a scratch and then I hit for a baller play at 8:38, okay? But it still produced what it produced for the day, okay? Now, I'm looking at that demand. This is that next 5 minute candle close. Now, I also know something about how price prints, okay? When 5 minute leaves a wick tail, I know that there's a 1 minute mitigation as long as it's inside the right location, okay? Now, I was saying here, as you can see, we want price to spike below that New York open, right? Now, the first trade that I ended up taking was actually at 8:37. So I just want to show that really quick. It was at 8:37. And I believe the price was I would have to look, but it was somewhere in here, and that ended up stopping me out right at the New York Open, and then I seen it reject right off New York Open, and I take the I believe 29.680s, making sure I'm in the right 5 minute location, right? And then I'm looking to attack people who shorted here, 29.767s, and then 29.770s, which was that high on day. Okay. And so after that scratch here, like I said, at 37, ended up taking the trade once I seen that sign of strength here, or excuse me, right here in 38. And then I've taken that, I seen the bounce off that New York Open, and then I took the trade pretty much here. It's like 60s, like six, yes, 660s was the area, okay? Now I was targeting the high on day, so that was definitely plus a 3R, right? So 5 times our risk was still inside the range, if that makes sense. So getting above the range to get to those 29.780s. Oh no. Okay, I'll do that in a second. Oh, I guess I don't have to do it now. We'll do it here in a second. Okay, I thought I was going to do it now. Okay, so back to this. Okay, so 5 times our risk was definitely going to be over the highs. Okay, now getting to the whole level, right, was going to be 7 times our risk. Okay, so if we got up to 29,800, that was going to be getting us 7 times our risk, even just from that entry there. Okay, now what I was anticipating when you look at this, let's go back to 5 here. Right. What I was anticipating here was that demand to hold and New York Open and the 29,650 level essentially, and then us get up to that whole level. Now, we ended up getting that delivery and we ended up exiting that trade. Let's see what time that exit was. The exit was 6 minutes after the entry. Okay, so 6:29 closed it. But where was the actual close? Like how much? Where was that? That's not the actual. Trying to see what time we closed it. Okay, so 6 minutes after. So let's see here. We took it. I knew that 38. 1, 2, 3, 4, 5, 6. So right when we pushed through the highs would have been here. So we were out here, like as it was delivering our 5 plus R, like whenever it delivered 5 plus R, essentially we were out. And so now as the market rolls over, what you gotta think is because we knew our higher time frame bias, like we knew like on a 15-minute time frame, like I was saying, when you look left, we were in supply. So if we rallied at New York and the overnight price was already bullish, right? Like if you look at the overnight player, and that was the other thing I didn't really talk about, but I ended up having a CFD buy that I bought and called out inside the Discord. Um, uh, this is where I bought inside the Discord overnight on CFD and then ended up playing that position through that high on day, right? So essentially what they did after we took profit on the positions, right? Like we took profit inside 15-minute supply because we weren't getting that push through, right? That we wanted, which we ended up getting at the end of the day. But that's what we essentially wanted. And we were 5 times our risk. So we had a great trade. What they did was they just came back down to those overnight traders, came back into the demand, filled the FEG, right? Which just would have been like here through here, okay? Filled the FEG, didn't go break the lows, and shorts, right? They didn't get the extension through the 29,250s. So what do they do, guys? If they're short, then ask yourself this question, okay? If you're short here at 29,700 you're putting your buy limits under old lows. Okay, you're putting your buy limits under old lows. If you start to see price start to turn around before getting to your buy limit, what are you gonna do? You're gonna manually press buy, and that's what you're seeing, guys. That's what you're seeing, short covering so fast back up to these individuals stop loss, right? 29,850. Because, right, everyone can see this. They're not going for previous day low, they're not going for 29,250, and they're rejecting market open. Now a beautiful position I like to play is buying below opening price in bullish conditions. If you're bullish for the week, it was only Monday. A lot of times price will capitulate over into the market open, right? Shorts will cover in that spot and it'll go back to external liquidity. It's a beautiful play, okay? And like we were looking for this to deliver, and then when you look left for here, and then I wanted to see this FEG, okay, between here and here be filled, right? And it got filled, and then price huggied, that's what we call it, right? 30,000, and it's still showing strength when I look into the end of day for this liquidity zone we're looking at here, 29 or 30,300, right? It's still looking pretty promising to get there, but let's not forget, right, the price that we created today, okay, and the highs that we have now. So price could easily slide back into the range tonight, come back into the demand, right, for me, and then maybe we see our way up again tomorrow, okay? But don't forget, as well as I get to looking at higher time frames, I'll be able to go over it a lot more better in the Discord. There is some really nice liquidity here, right, and under lows from yesterday. But looking at the price as of right now, it looks relatively really strong to continue higher. So again, the position that we took today, just want to kind of briefly go over it one more time, is we took the buy position here, 838, right, off that New York open tap, buying below the open in bullish conditions. Price ended up delivering us 5R. We were only in the trade for like 6 minutes and 11 seconds before delivering that liquidity, which was amazing. And then we watched a lot of buyers basically take profit. That's where you see sells fill, because when buyers take profit, they are actually putting sell limits, right, in certain spots, or they're manually pressing sell to get out. And then a typical target is going to be usually in an equities open, like a New York, right? A New York lower high. So if you're just on the sell side move, a lot of your liquidity can come out at the whenever 830 opens, it's going to make a low. And a lot of times individuals, are coming into the markets in this time, and that's when they're going to put their risk, okay? And then the position that I gave out really quick here, because I was starting to notice this on my personal accounts, and we had already killed it on futures for the day with the team, was I was starting to notice that if we weren't going to break through that 29,250, that we could possibly see that RSV model again, 15 and 5, down in this zone. So one of the things I like to wait for is the 5-minute signal, right? I like to see a 5-minute sign of strength inside a higher time frame demand. So it's not just like any time to play it. Like you don't just play it every time you see something, right? There has to be timing, right? First 15 minutes of the hour, last 15 minutes of the hour, or a really legit 5-minute close at like 9:30 sometimes as well. But it has to be like 9:25 and like right when 9:30 is closing, and then you're seeing like a 15 5-minute candle transition at the same time. Okay. Now we had the fair value gap, and then inside that fair value gap, when we're looking left, one of the things I'm looking for is this to be an institutional candle, right? And so that institutional candle did hold. Okay. And so when all these shorts, now this is still a pretty good short for people who did, but most people didn't sell it above New York. They guessed and kind of shorted, I'd say 29,620s down, or like they're breakout traders. So they sell the breakout. Okay. Now, those individuals got to take profit too, right? Even if they sold it right here at 29.5 and down to 400, it's still a 100-point move, right? But when you're looking at everything as a collective, you start to realize where people are placing their limits and where liquidity is resting. Okay. So one thing I look for in the RSV model is a 5-minute sign of strength. I won't even like to look at the trade until I get that, because I know what's happening on a small time frame perspective. Now, 9:15 going into 9:20. Let's break this down to 5 and 1 minute, and then we'll be out of here, and I'll kind of explain why I'm holding the swing trades. Okay. Now, 5-minute sign of strength. As soon as I see this, guys, I show this all the time, and I do this live all the time. I know where the target is, high on day, right? I know where my 5-minute sign of strength is. Okay. Bang. Now, after that 5-minute sign of strength, guys, can you identify a 1-minute mitigation on the right side? Okay, so what I'm saying is over here on the 1-minute window, because everybody plays 15-5-1 and other stuff, right? All I'm saying is after this candle closes, okay, can you identify higher highs and higher lows? Okay. Most of my entries come in the second candle after the sign of strength. Okay. So what I'm saying here is the second candle, and then at a 5 minute close, this would be 23 to 24. This candle is 24 to 25. Okay, like right here. So if I'm saying the entry usually comes in the second candle of the 5 minute, there's a 1 minute mitigation, someone shines the strength engulfing, this would be a good trade. Okay. Same setup as before. Entry, 20 handle risk, right? Because we have a fixed risk, right? For a 5 times our risk gain. Okay. So if you look at that trade, that definitely produced 100 points. The markets have been crazy. Now, one thing I like to do is play up to point of interest, New York Open, okay? And then I like to protect or pay myself. Now, as you can see here, if you're risking 20 handles on this position, right, 200 points, right, gain is going to be a 10 times your risk. That's a beautiful trade. You don't need much more than that, right? You could shave 70% of this trade down, stay break even, and see if it can go for the full TP. Okay. And so since I was playing this on CFD, that's essentially what I did. Was able to partial some, protect or pay myself at point of interest, just like I teach, right, in the Discord. And then price kind of came down in here, reclaimed at that 29,500, and price continued up. And then I ended up partialing out of most of the move that I had and left like a little small runner, just like I did the night before, inside the Discord. Okay. And so that was the move that we gave out. Thought it was still a really clean move. You don't always have to be right about the direction at that time, to make money or to produce R multiple. But then the ideology to see the RSV model set up again, 5 minute sign of strength, 1 minute mitigations, and to play back up to that point of interest for almost 10 times your risk in a very short amount of time. We're also talking about 10 minutes, right? 10 minutes, price moved 237 points. Okay. And so, with the system that I teach with four contracts is $8 a point, right? If you had one 50K Top Step account today and you took four contracts, right? With it was just $8 a point, you would have been up $1,600. Okay. So if we go in the Discord, okay, let's see from the live trading chat today. Okay. Okay. Here's Chris, right? Reentry buys on ES, $1,500. Okay. And then we have our personal chat that we actually have when we're all talking here. Okay. Chad, 646. This is across 3 accounts, I believe. Okay, this is 8:47 this morning. Then Noah, right? Milton, right? It's 8:46. Guys, we were done today before 9 a.m. Okay, it's freaking crazy. All right, like I said, Chad here, 646 times 5 accounts, dude. 6 times 5, 3 racks today, dude. Okay, and so that was the move, right? And I'm sure some of these individuals caught the second RSV of the day. Now, what I want to show as well, really quick, is if you look, right, I talked about this area in the pre-market, not only being the 1 hour demand, which was here, this candle here, you got to really trust these areas, but inside that 1 hour demand, everything is fractal in the marketplace, okay? So inside that 1 hour demand was if you look to the right here, the 15-minute demand, okay? And so if you're having a hard time understanding these levels and seeing them, that's why I invite you to come to the trading floor and let me do that part for you for at least the amount of time until you're comfortable doing it yourself. Okay. And it's showing you the zones. Okay. Now, this is also an amazing pullback when you're looking at like Fibonacci retracement. This was our current low of the week, which was like right in here, but I like to use this low because it was my framework candle. And then this was at this point here would have been our high. So I'd love to see 78.88.6 retracements that have draws on liquidity, but don't go ahead and fulfill, right? Like 250s or break through that liquidity. It responds and the shorts cover inside the demand. And like I said, all it is by understanding this is understanding that people who are shorting down in these type of moves that don't have the understanding of higher time frame context, they're getting trapped because if they're not having great positions, right? They're shorting at the low end of the day. Like they're shorting down here for like 100 point move down to the demand. They call that a great trade. Hey, if it works for you, it works. But you're taking yourself out of position and you're trying to be with the trend, but the goal, with smart money concepts or ICT or whatever you trade in those realms is to observe the masses and do the opposite. Okay. And so beautiful locations is what I wanted to show. And then the other beautiful thing about this was the 4 hour, because I talked about possibly us moving down to that Thursday, June 10th or 11th price. Okay. But I also said this, that, we had a great chance to hold inside this demand candle here today on the 4 hour. And if we did, the reason why it would turn to a wick is because it's going to create mitigation price action that's super fast. Okay. But it's going to show you the same pattern over and over. People are just scared to play the manipulation because they're just scared. They haven't done it before. Okay. So great 4 hour play. And then what was the other thing I was looking at? And then that ended up being, like I said, a really, really good daily play. So the last thing I wanted to bring up was SpaceX, right? We talked about, we like to use Tesla, Nvidia, and SpaceX to kind of gauge, where buyers and sellers are, and like, are the markets bullish or not? And as I was watching and giving out trades today, I was watching the structure really build here on SpaceX. Now, one thing you can notice is they actually delivered below that IPO price, right? Like this candle here delivers below. And ever since then, essentially, I've drawn a line from the middle of that candle up to like the 190.50s. And as long as we continue to, break structure, maybe tomorrow, break through these wicks here, 160s and maybe 164s, I could definitely see us pushing back up to 171 potentially. But we'll see. We'll definitely see with that. And we'll see what the overnight price presents. But going into a shorter week, right, we have, I believe, NFP on Wednesday this week because we don't have Friday trading due to the holidays and July 4th this weekend. So, um, yeah, so beautiful RSV models, beautiful locations, all the concepts really playing out in a really good way, right? Consistently, and not just for me, right? Obviously, I showed you guys again. Shout out to Josh, first individual to join. Also, he's brought on two other of his friends, right? Gavin, really cool guy that I've met through the group as well, and then Noah just started, and he just got funded today. Right? Only my second week into the group sessions, been learning so much from Ricky. It's insane. You're a genius, bro. Can't wait for more sessions. I'm excited for him. Right? So, yeah, so cool. We went over the position that we took. We went over the second RSV model that you could definitely go back and break down, understand draws and liquidity, understand short covering, put yourself in the shoes of someone shorting down and how you would get out of the position. And then, excuse me, and then looking into the 4 hour and 1 hour overnight, going into tomorrow's price based on the daily as well, that daily bullish pattern still looking pretty strong as of right now. I personally would like to see more upside here on NQ, but I would like to see what happens once we deliver. So I'll go ahead and show this really quick. I'll be interested to see what we do when we deliver inside the supply, right? And if we get there before equities, right? And do we get there at London Open tonight, 2 a.m.? I'll be checking to see in the morning. And then delivery of last week's high, and then pushes back into, like I said, that 4 hour, 1 hour supply would be getting us back into last week's, I believe, market open, right? So that's last week. So I'm gonna go ahead and delete that. But target areas are going to be supply, key level, 650s, 700s. And then essentially I'm just identifying the range from this high to the low currently, okay, to this low, to see how we retrace up into the supply zones, okay? And the month's getting ready to come to an end. So I'm also going to be very understanding that they could find a reason to flash down into the 4 hour demand, but I personally right now doubt it. But depending on how we, like I said, respond once we get into 1 hour supply zone here, 30,150s, we'll make a decision. So I appreciate you guys watching. We'll see where we're at tomorrow. And we've got about 2 more days to trade. So if you haven't joined a Discord, there will be a link in the description in this video. Definitely lock in. If you're wanting to learn and be live and understand these zones, concepts, key levels, everything like that, then definitely join the premium group. And as you can see, the premium group, guys, is $100 a month. And Josh just got a payout for $8,000, guys. I mean, so I believe the value is there, and I'm super excited for the future of what we're going to be doing. So reach out to me if you have any questions. I'm RickeyTrades on all social media, and talk to you guys tomorrow. Have a good one.